The world's second largest economy, the mighty China, standing tall, proud, confident. But behind the scenes, there's panic. Quiet panic. Not from the people shouting on the news, not from the government officials giving speeches, but from the boardrooms, the factories, the investment offices. There's a fear growing. Because deep down, they know something that's becoming harder and harder to ignore. China can't afford to cut ties with the United States. It sounds dramatic, but this isn't just about politics or trade disputes. It's about survival, economic survival, and the truth? It's something China doesn't want to admit. Let's break it down. For years, China was known as the world's factory. It made everything from cheap plastic toys to high-end iPhones. But this didn't happen by accident. It happened because American companies came to China. Walmart, Apple, General Motors, Intel, and they brought more than just money. They brought technology, systems, skills, and a playbook. They trained workers. They helped build factories. They showed China how to scale production to a global level. And in return, both countries made billions. But the truth is, China rose up using American business as a ladder. Now imagine what happens if that ladder gets pulled away. Let's take Apple, for example. Apple's supply chain is deeply connected to China. Hundreds of Chinese companies are involved in making Apple products. These companies employ millions of workers. If Apple starts moving away, or just reduces orders, that ripple becomes a shockwave. Thousands of jobs vanish. Whole cities could go silent. Yes, America is now trying to diversify, moving supply chains to countries like Vietnam, India, and Mexico. But here's the catch. China still holds a massive share of global manufacturing. Losing that share of U.S. business would be a direct hit. Not just to profits, but to China's position in the world economy. But it's not just physical goods. The digital world tells the same story. Think about TikTok. It's one of the most popular apps globally. But where did it all begin? In America. TikTok didn't explode in China. It exploded when it broke into the U.S. market. That one market gave it global fame. Without success in America, TikTok would have been just another local app. The same goes for many Chinese tech brands. If they make it in the U.S., they gain global trust. But here's the problem. That door is slowly closing. The U.S. is getting suspicious. Laws are tightening. Chinese companies are under pressure. And when the American market closes off, it's not just about sales. It's about credibility. Because no other country gives you the brand value that America does. Let's look at green energy. China is proud of its solar panel industry. It leads the world in electric vehicle batteries, solar parts, and more. But guess who buys a huge chunk of it? The United States. Without the U.S. market, companies like BYD, China's top EV maker, can't grow the way they want. They want to be global. They want to beat Tesla. But without America, they're boxed in. And it's not just about selling. American companies bring investment, technology, and partnerships that help China tackle huge challenges, like pollution, coal dependency, and overproduction. Break that cooperation and both sides suffer. But China suffers more. Now let's talk trust. Foreign companies don't just invest in China because of cheap labor. They invest because American firms have been doing business there for decades. And that gives a signal to the world. China is stable, China is open, China is worth the risk. But what happens when those firms start pulling out? What happens when the headlines are filled with trade wars, factory raids, or stories about human rights concerns? Trust disappears. And when trust disappears, so does foreign money. That's already happening. Foreign direct investment into China has started to drop. Multinational firms are looking elsewhere. They're moving their money quietly. And it's scary. Because without that money, China's growth begins to slow, fast. But here's something that doesn't get talked about enough. China is getting old. The population is shrinking. The birth rate is falling. The working age group, the group that drives, is getting smaller every year. So, to keep growing, China needs productivity and innovation. And guess who leads in those areas? The United States. Without access to U.S. systems, research, and markets, China struggles to boost productivity. That means slower growth, less efficiency, and fewer solutions for its aging population. And now we have to talk about something even deeper, the global financial system. Even when China trades with other countries, most of that trade still happens in U.S. dollars. Major banks still use the SWIFT system, which is run by the West. That's not just a technical detail, it's a lifeline. Because if relations with the U.S. collapse badly and China gets locked out of this system, like Russia did after invading Ukraine, then it's not just about losing business. It's about being cut off from the world. The Chinese government knows this. It knows that complete economic isolation isn't just possible, it's dangerous. China is too big to hide, and too dependent on exports to live without these global connections. So yes, they talk tough, but behind closed doors, they understand. The cost of losing America is massive. Let's bust one of the biggest myths right now. Some people say, China doesn't need the US. They have other friends like Russia, Africa, or Southeast Asia. But let's be honest, that idea falls apart the moment you look closely. Start with Russia. Russia is heavily sanctioned. Its economy is shrinking. It can't buy in large volumes, it can't sell much high-end tech, and it can't replace the money or stability the US offers. For China, doing more business with Russia is like selling expensive phones in a town where nobody has electricity. It just doesn't work. Next, look at Africa. Yes, China has made big investments there, building roads, railways, and offering loans. But most African countries are still developing. They don't have the buying power to absorb the massive amount of goods China needs to sell. Africa is a future market, not a replacement for the US. And then we have Southeast Asia. Countries like Vietnam, Indonesia, and Thailand are growing fast. But here's the catch. They are not one single economy. They compete with each other, have different rules, and can't match the spending power or market size of the US. So if China shifts its focus away from the US, it ends up doing business with smaller, riskier, or less profitable partners. And that's not a smart trade-off for a country trying to remain number 2 or challenge for number 1. But there's more to this than just trade and money. There's something called soft power. This is where the US dominates. Think about it. American culture is everywhere. Hollywood movies, Netflix shows, NBA games, Nike sneakers, Beyoncé concerts. These things shape global trends. They make people across the world want to connect with the US, buy American products, and dream American dreams. When companies or countries do business with the US, they gain global visibility. It's not just about selling, it's about being seen. Now compare that with China. China has tried to promote its own culture globally, but it hasn't worked the same way. Chinese films, music, and celebrities haven't broken through on a global scale like America's. That means when a Chinese company makes it into the US market, it's a big deal. It earns them global attention, respect, and brand value that they simply can't find anywhere else. And here's where it gets even more serious. There's a military and geopolitical angle too. Right now, there are serious tensions between China and the US over Taiwan, the South China Sea, cybersecurity, and more. The relationship is rocky. But guess what helps keep things from boiling over? Business. When both countries are making money together, they have a reason to talk, to compromise, to avoid war. But if trade breaks down, if the economic ties snap, then dialogue becomes harder, trust vanishes, and the chances of conflict increase. This isn't just theory. History shows us that economic isolation leads to danger. In the early 20th century, when major powers stopped trading and turned inward, it helped trigger World War II. No one wants that again, especially not in a world filled with nuclear weapons, cyber attacks, and global supply chains. So even though there's rivalry, even though there's distrust, the economic bond between China and the US is also a safety rope. It keeps both countries talking. It keeps war at bay. But now let's zoom in on something even more fragile: the psychology of the Chinese people. For years, they've been told that China is rising, that the country is becoming a global leader, that their lives will keep getting better. And for a long time, that story was true. Jobs were growing. Cities were booming. China was winning medals, building skyscrapers, and launching rockets into space. But a lot of that confidence came from successful partnerships with powerful countries, especially the United States. Now imagine what happens if those partnerships collapse. What happens if jobs start disappearing? If growth slows down? If Chinese companies can't go global? Suddenly, the story begins to crack. People start asking questions. They start doubting. And in a country where public opinion is tightly controlled, that kind of doubt is dangerous. It can lead to unrest, to protests, to instability. That's why the Chinese government works so hard to manage the image of strength. Because they know that the real danger isn't just on the outside, it's from within. Now let's talk about something many people ignore: the hidden networks of global power. In today's world, being strong isn't just about making things. It's about being connected to ideas, to capital, to technology, and to decision-making platforms. Here's the truth. China is good at producing goods, no doubt. But the real power is in who controls the future. The next big things like artificial intelligence, quantum computing, biotech, semiconductors, and even space tech. And guess who's still leading in most of these areas? The United States. America has the top universities, the biggest tech companies, the strongest research labs, and a startup culture that attracts the best minds from around the world. If China cuts ties with the U.S., it loses access to all of this. Think about it. Chinese students go to top U.S. universities to learn cutting-edge knowledge. Chinese companies partner with American firms to access advanced tools and software. Chinese scientists often collaborate with U.S. researchers to make breakthroughs. Break that connection, and China starts falling behind, not immediately, but slowly, quietly, in ways that show up when it's too late. The tech race is not just about who can build faster, it's about who can imagine better. And right now, the U.S. is still the global center of imagination and invention. Also, think about finance. The U.S. controls the global financial system. The dollar is still the world's reserve currency. Most big international deals happen in dollars. U.S. sanctions have real power because most banks still need access to the American financial system. China has tried to build its own alternatives, but it hasn't worked on a global scale. Investors still trust Wall Street more than any Chinese exchange. If Chinese firms are locked out of U.S. capital markets, they lose big. Investment will dry up. IPOs will struggle. Foreign money will look elsewhere. Now, let's say China decides to go it alone anyway. Let's say it fully breaks from America. What happens next? First, exports drop. That's millions of factory jobs at risk. Next, foreign companies pull out. That's loss of investment, partnerships, and tax revenue. Then, tech slows down. Without access to U.S. chips, software, and research, China's tech edge dulls. Finally, the public starts feeling it. Rising prices, fewer jobs, more censorship, less hope. And all of this adds up to a shrinking future. The dream that China sold to its people, that the country would rise and lead the world, starts to fade. That dream depends, in large part, on America, on staying plugged into a global system that the U.S. still anchors. So here's the simple truth. China can't afford to cut ties with the United States. Not now, not for many years. Yes, the relationship is complicated. Yes, it's full of tension and mistrust. But walking away would hurt China more than America. It's like pulling out one of the main pillars of a giant skyscraper. It won't collapse immediately, but cracks will form, floors will weaken, and one day, the whole structure might shake. At Richie Rich, we dig deep to find stories that others skip, and this is one of them. Beneath all the headlines, beyond all the speeches, this one fact remains. The bridge between China and the U.S. is too valuable to burn. Because when money, power, tech, and peace are all on the line, cutting that bridge is not just risky, it's dangerous. Let's break one last myth. Some people believe that China can simply replace the United States with other partners, like Russia, parts of Africa, or Southeast Asia. On paper, that sounds like a backup plan. But in reality, it doesn't work. Russia, its economy is shrinking. It's under massive sanctions. It can't buy or sell freely. It has oil and gas, sure, but not the kind of market China needs to grow. Africa? It's growing, but most African countries are still developing. They can't buy billions of dollars worth of Chinese electronics, cars, or smartphones like Americans can. Southeast Asia? It's full of potential, but it's not one big market. It's a group of many different countries, each with its own language, currency, rules, and problems. Together, they still don't match the spending power of the U.S. So if China cuts America out of the picture, it's not trading up. It's trading down. It's like trying to replace a luxury client who buys $100,000 worth of goods every month with 10 smaller clients who can only buy $500 each. The math doesn't work, and it's not just about money. It's also about image. America still controls global culture. Music, movies, sports, fashion, brands. Working with the U.S. gives companies credibility. It gives them visibility. When a Chinese brand enters the American market and does well, it instantly gets respect around the world. TikTok is the perfect example. It didn't explode because of China. It exploded because of its success in America. Without that gateway, most Chinese companies would struggle to build a global identity. They might be huge inside China, but invisible everywhere else. Now let's talk about something serious. Conflict. China and the U.S. have political tensions. Everyone knows that. Taiwan, the South China Sea, cyber attacks, espionage. But do you know what keeps these tensions from turning into full-blown war? Trade. When countries make money together, they have a reason to talk, to negotiate, to avoid conflict. Cut off business, and you also cut off trust. And when trust disappears, diplomacy becomes impossible. That's a scary place to be, for both sides. Now think about the people in China. For years, they've been told, "We are rising. We are strong. We are the future." That story worked because China kept growing, because it had deals with top companies, because it had business ties with powerful nations, especially the U.S. But what happens when that story no longer feels real? What happens when growth slows, when jobs vanish, when hope fades? People may start asking questions. And in a country where public opinion is tightly managed, too many questions can become dangerous. So once again, China has every reason to keep that bridge with America strong. Because in today's world, economic power is not just about what you make, it's about what you're connected to. And right now, the United States still holds the keys to the world's biggest market, the most advanced technology, the strongest financial system, the biggest media and cultural influence. The fastest innovation pipelines. China can compete with the US, yes, but it cannot replace it. Not now, not soon. If China tries to walk away, it will feel the damage slowly but deeply. First the exports, then the jobs, then the investments, then the trust, and finally, the dream itself. At Richie Rich, we look beyond politics and headlines to show you how global power really works. And this story? It's a big one. Because the truth is simple. China's rise has always been tied to its connection with America. Cut that cord, and you don't just lose a customer. You lose access to systems, innovation, opportunity, and respect. And that's a price too high for any rising superpower to pay. So no matter how loud the rivalry gets, no matter how tough the negotiations become, one fact remains. China can't afford to cut ties with the United States. Not because it's weak, but because it's smart enough to know some bridges are too valuable to burn.